Now let's talk about the short-term employee benefit. Okay, so what all goes into a short-term employee benefit? As I said, right, what you get paid in next 12 months. Short-term in general, right? Like whatever you want to get paid within next 12 months is called short-term employee benefits. Okay, whatever gets pushed out beyond 12 months, it's like a other long-term employee benefit, like a retention plan. If I have a retention plan which I put in place, and I say whosoever is going to complete and be in my employment for a period of 3 years, that person will get paid so much, right? Now that's an other long term because I am going to make the payment after 12 months, right? So 12 month is a criteria, is what you need to remember if I were to distinguish between short term and other long term. Post employment is simple, right? Which is after the end of the employment, which is like retirals, right? What are the retirals benefits, right? And then you have termination, which itself suggests. Thank you very much. Okay, okay. So let's look at the short-term employee benefits. What all is kind of covered here? Different types of arrangements. Okay, um, items expected to be settled wholly before 12 months, right? 12 months, right? 12 months. This is important, as I said. 12 months after the end of the annual reporting period in which employee render the related service. Reclassification may be considered if the characteristics of the benefit change, such as a change from a non-accumulating benefit to an accumulating benefit. You know, there's possibility that a short term may become long term if you decide not to settle this in 12 months, but to pay after a certain specified period of time. If there's a change in expectation, the timing of settlement, is not temporary. Reclassification is not required if the entity expectation of the timing of settlement of such benefit has changes on a temporary basis. Suddenly, let's say I have some cash flow issues, and then hence I want to push the payment to the 13th month or to the 15th month. That doesn't change the classification in itself. That's more of you trying to manage your cash flow. So what is contractual? Many times, this you need to look at it from the contractual rights and obligation of the employer and the employee, right? So what are my contractual rights and obligation? Rights from an employee perspective, an obligation is of the employer. Employer has to pay, employee has to receive. Of course, employee has to provide the services, right? So if I, as an employee, I'm providing my services, I'm doing what is expected out of me to do, and if my terms of employment suggest that this has to be paid to me within 12 months, right, of this being accrued, then it is a short-term employee benefit. Otherwise, it's a other long-term employee benefit in a way from that perspective. So what all it includes? It includes wages, salaries, and social security contributions like provident fund, paid annual leave and paid sick leaves, profit sharing and bonuses, which are again paid within 12 months. If there are long-term bonus arrangements, now they are not part of this, then they get into other long-term employee benefits and non-monetary benefits, right? Such as medical care, housing, car, and free or subsidized goods or services for current employees, right? I mean, all of them are like short-term employee benefits, right? All such arrangements, right? So think about an employee, right, in a private sector. Think about of an employee in a government sector, right? So if you're in a private sector, I can say you don't get, beyond your salary and your retirals, right? That's what you get. But if you're in a government sector, you get, of course, many other things, right? Salary, you get retirals, you get housing, you get car allowance, many things which, depending upon, the type of the company you started working for, they could have very different types of way of compensation to their employees. So all such arrangements, you've got to assess that whether it's a short term or it's a long term, right? Short term is what is going to get paid out, or you as an employee going to consume that benefit in next 12 months, right? If the answer to that is 12 months, then it is a short-term. Answer to that is no, it's not going to get consumed in 12 months, then it is long-term, right? Other than other long-term employee benefits, and we will talk about the accounting for short-term employee benefits with few examples as well. So when to recognize in terms of the recognition and the measurement, right? What to recognize in the balance sheet, right? Undiscounted amount of short-term employee benefits. So in a way, since it is less than 12 months, there is no discounting in a way which is required here. Amount which is already been paid. So whatever the undiscounted amount minus the amount already been paid is my liability or accrued expense. Whatever is being paid, that's and whatever has been accrued, all of that is generally a charge to the P&L, unless these employees are working on projects which are also getting capitalized under the principles of Ind AS 16 or under the principle of Ind AS 38. So employee cost is generally in a way is a period cost, so to say. Okay. It can be capitalized if you are working on project which is there under Ind AS 16 or under Ind AS 38. Either you are helping to build a tangible asset or you're helping to build an intangible asset. It is also possible a portion of the employee cost now, if you were to look at Ind AS 115, right? We talked about that contract acquisition cost, right? If let's say if certain bonuses are being paid as part of acquisition of a contract, now that also can be considered as an incremental cost and can, instead of being charged to P&L, that can also be deferred in a way from that perspective and to be amortized. So, how do you accrue in the balance sheet is what you are supposed to pay undiscounted because it is less than 12 months, undiscounted minus the amounts already been paid. So whatever you've been paying on a month-on-month basis, that's like the liability or accrued expense, asset or prepaid expense. What to recognize in P&L? Undiscounted amount of short-term employee benefit equals to the expense unless other standard Ind AS or including Ind AS 2 as well, right here. So there are multiple other standards, right? If it goes as part of the inventory capitalization, it may go as part of the fixed asset capitalization, if it goes part of the intangible asset capitalization, or it goes as part of the revenue, in a way, contract acquisition, so on and so forth. So otherwise, unless other standard require or permit the inclusion of benefit in the cost of it. I hope this is making sense to you. Again, as I said, it's very, very simple. You got to visualize this in the context of you as an employee or you as an employer. And then what am I paying to my employee? Is that is you need to understand the accounting. What am I receiving as an employee? That you need to understand. And then we look at broadly 4 categories. Is like short term, other long term, and then post-retirement, which is post-employment, and the termination benefit. These are broadly 4 categories, right? Then you have short-term paid absences. How do I deal with this? An employer normally compensates an employee on account of his absence, either by granting privilege leave, vacation leave, or sick leave, or maternity or paternity leave. These compensated absences fall under 2 categories and are recognized as follows, right? One is an accumulating and the other one is a non-accumulating, right? Accumulating means that when the employer entered the service, that increase their entitlement to future paid absences in a way when it is non-accumulative, as and when the absences occur, right? From that perspective. So there are 2 types. So one is that so essentially the difference between the 2 is that can I carry it forward to a future period, or no, you can't carry it forward. You have to consume it within the period, within the year of this particular benefit which you have. So that's where accounting do have an impact. If it is accumulating paid absences, right? So how does the accounting in a way gets impacted? These are the absences that are carried forward and can be used in future period if the employee is not able to use them in current reporting period of the employer. They can be either paid absences, in a way they are vesting, so entitled to cash payment, or they could be non-vesting in a way, are not entitled to a cash payment for unused entitlement on leaving, but I can take leaves in the future period, and that without impacting my monthly compensation in a way. So when there is an accumulating paid absences, right, whether they are vesting or non-vesting, the entity shall measure the expected cost of accumulating compensated absences as the additional amount that the entity expect to pay as a result of the unused entitlement that has accumulated at the end of the reporting period. Now, many times, people do ask me, that I understand that if I have to make a cash payment, right, to an employee, that I need to accrue for that cost, right? But why do you ask me to accrue for a cost, right? When I don't have to make a cash payment, he can take leave, okay, he can take leave, because he's earned those leaves, right? Now let me give you a simple perspective here, okay? So what happens? Let's say I'm an employee, okay, and I'm working here, and what happens is that, let's say I have 12 leaves which I can take in a year, right? And I decided, of course, I'm not sure a great employee, but I think what I'm just trying to say is that as a let's say, I had a lot of work during the year, and hence I decided not to take any leaves, for example, okay. Now, all these 12 leaves which I was entitled for, I've decided not to take any. Okay. That means that 12 leaves which are accumulating at the end of the year. And let's say my monthly compensation is, let's say 2 lakh rupees per month. Okay. So now I was entitled to take this 12-day of leave, which I have not taken. And now let's say these are accumulating leave. That means what? They don't lapse at the end of the year. I can carry it forward to the next year. Now, next year, I can actually take 12 days of next year, and then I can take 12 days which I carry forward from the previous year. So in a way, I can now take 24 days of leave in next year. Okay. So essentially, even though the 12 is yet to be earned, but the 12 I have already earned, right, from the year, let's say 2020, for example. Now, there are two scenarios, right? One is that, let's say, if I were to leave employment, right, on the next following day, say on 1st of January, 2021, and then if you are in this bucket, then the company will have to pay cash, right, for those 12 leaves, which has been lapsed, which I go to cash out, right, because then I'm entitled for the cash payment. So that is the answer, right, to say that you'll have to accrue for the cost of those 12 vested leaves, so to say, for which you are under an obligation to pay cash. So let's say if my 2 lakh rupees is my salary per month, and they, let's say, number of days in a month are, say, and again, how do you do this? So there are 22 working days. You divide it by 22 working days. And let's say that gives you 10,000 rupees per day, and then there are 12 days. So you provide for a cost of 1,20,000 is what I have to make the payment. Now, depending upon the payment formula, many companies say, no, I will not divide by 22. I will divide it actually by 30. And then that's how this 12-day of payment will be considered. But many companies do it otherwise as well, depend upon the policy. Okay. Now, let's think about a company which is not going to make the payment in cash, which is this company, right? Now, here what happens, what the theory is saying here also, you need to accrue for the cost. Okay, why? Even though I don't have to make the payment, it is like this, that let's say now I'm not supposed to leave my employment like on the next day, right? So I've been supposed to continue to be in the employment. So if I'm supposed to continue to be in the employment, and now I'm entitled for 24 days of leave, for which you have to anyway make that 2 lakh rupees payment per month, right? And in that case, so what essentially is happening, let's say now I decided to take leaves, chutti. But the company is a continuous organization. You need to continue to function the way you are doing. That means the work I am doing, that is supposed to be replaced by an incremental cost which the company needs to incur by bringing in somebody to replace the on the day when I am on chutti, right? So that's the philosophy, that this is why it's called compensated absences. So once you want to be not going to be the workplace, I got to bring in someone else to do your work. Now, if I'm going to bring in someone else to do your work, I'll have to make payment to that person, right? So essentially, and since that is already been earned by you, I need to accrue for that cost, which I may need to make to a third party if you were to decide to exercise the leaves. Okay. And that is why I'm sure it's making sense to you. So essentially what we're trying to say is the philosophy of accrual of this cost is that the company, as a company, I have to incur this cost, whether by making a direct payment to you by way of making payment in cash, right? Or by getting someone else to come and work for this, right? I think that is where the accrual of the cost is important, from that perspective. So there is a cost which is to be incurred by the company if an employee were to take leave which which they have earned in the previous period, and which is to be in a way allowed to be carried forward to a future period. If they were to lapse, which is we want to talk about non-accumulating benefits, right? Then you are okay. But then there could be some complexity on a quarter-on-quarter reporting for the companies who needs to do quarterly reporting of their financial statements. All right. So I hope this is making sense to you, right? Accumulating paid absences, they are vesting, they are non-vesting. You're in one case you're entitled to cash payment, in the other case you're not entitled to cash payment. But from a provisioning perspective, you've got to measure the expected cost of accumulating in a way compensated absences as the additional amount that the entity expect to pay as a result of the unused entitlement that has accumulated at the end of the reporting period. Let's look at this example. As at 31st of December 2019, Reliable Limited has 120 employees on their payroll. According to the HR policies of the company, each employee is entitled for the below annual leaves, 25 allowed, out of which 8 can be carried forward, right? How many employees I have? 120. So they are entitled for 25 annual leaves, out of which 8 can be carried forward. Sick leaves, 12, out of which 5 can be carried forward. Now, on 31st of December 2019, the average carried forward leaves are 6 days per employee of annual leave. 6 days per employee of annual leaves means this one against 8, and 2 days per employee of sick leave, right? Means against this, right? 2 days. Based on past experience, okay, on an average, 25 employees, on an average, 25 employees would claim annual leaves, and 15 employees would claim the sick leaves which are carried forward, right? On an average, 25 employees would claim annual leaves, and 15 employees would claim the sick leaves which are carried forward. Now, what is the liability to be recognized by Reliable Limited towards annual and sick leave on the reporting date? Assume that the leaves are non-vesting. Okay. So when you look at the non-vesting, means what? I don't have to make the cash payment. Okay. That's what we're trying to say. They are non-vesting. I can carry it forward. It's non-vesting. Should recognize the liability as below. On the annual leave, number of employees claiming annual leave into average unused annual leave. So how much is my average unused annual leave? Is 6 days. So 150, right? 150 is 25 into 6 days. Okay, that's what I need to look at. And from a sick leave perspective, So for their carry forward leaves, 6 days per employee annual leave is likely to claim, right? From a sick leave perspective, number of employees claiming sick leave into average unused sick leave, which is what? 15 employees would claim the sick leave. And the average unused is what? 2 days, right? So 15 into 2, which is 30, right? So that is what we will do. So the leaves which are expected to be utilized by the, because that is where only I need to compensate. Okay. If you are a hardworking employee, you're not expected to take leave, be my guest, right? So and hence that is the cost which I'm supposed to incur is the period which in a way I need to refill your position with someone else in a way to deal with that. That's the theoretical kind of approach from that perspective. And of course then this becomes a recurring cost, right? And you need to keep on truing it up depending upon your actual experience. So this is like a matter of accounting estimate. Okay. Now, if there are non-accumulating paid absences, right? What we're trying to say that do not carry it forward and they will lapse if the current period entitlement is not used in full by the employee. Okay, if they're going to lapse, right? And they do not entitle employees to a cash payment for unused entitlement on leaving the entity. So you neither you can carry it forward nor you get the payment of the cash, right? So then you are okay, no liability, right? Then you recognize no liability or expense as the employee service does not increase the amount of the benefit. Neither you can carry it forward nor you are entitled for the cash payout. I think we are good here. No liability, right? No liability. But if you can carry it forward, even if you are not entitled for the cash payment, but it is likely that you're going to exercise that benefit in the future. As an organization, I need to provide for that liability, right? I need to provide for that liability. Okay. Now when we talk about the profit sharing and the bonus plans, okay, the profit sharing and the bonus plans. Expected cost of profit sharing and bonus plans shall be recognized when, right? Shall be recognized when the entity has a present legal or constructive obligation to make such payment as a result of past event, right? Your present legal or constructive obligation, okay? Your present legal or constructive obligation to make such payment as a result of past, and you can make a reliable estimate of the obligation. You make a reliable. So it is true for any provision, right? That you have incurred the cost, right? Or you received the benefit, and you can determine this reliably, right? So if you look at the Ind AS 37 as well, right? When do I make a provision? When I can make the estimate reliably, right? And I have a legal or constructive obligation. And when is the legal and constructive obligation? That means the terms of the employment suggested so, and those in a way being fulfilled or in the course of being fulfilled, then I need to in a way accrue for these costs if I can estimate them reliably from that perspective. So what is a present obligation? It exists when and only when an entity has no realistic alternative but to make the payment in lieu of profits and bonuses to its employees. And an obligation under the profit sharing and bonus plan results from employee service and not from a transaction with the entity owner. So I think that's the distinction, right? Are you required to make payment in the capacity as an employee or in the capacity as a shareholder? Okay, I think that's the distinction. Profit sharing. Many times, let's say, if you're a shareholder as well and you get paid dividend, right? And you're an employee of that company as well. So the dividend is being paid in the capacity as a shareholder, and hence it's not an employee benefit plan. But if you're getting bonus, right, which is not being paid to the other shareholders, right, then it's a P&L charge. So I think, and the tax nuance of that is the similar, very different of the dividend versus the employee bonus and so on and so forth. So you got to make sure that in what capacity you are getting paid, as an employee or as a shareholder, right? Or as a vendor. So if you're getting paid as a vendor, the accounting is very different. So we need to We need to understand that carefully, right? So an entity recognizes the cost of profit sharing and bonus plan not as a distribution of profit, but as an expense, like a bonus, like payment of other in a way benefit, right? So if profit sharing and bonus payments are not settled wholly before the 12 months after the end of the reporting period in which the employee renders the related service, then those payments are considered as other long term. Like as I said, if you have a retention plan, which is to be, let's say, retention is over a 3-year period, right? Or a profit sharing plan, which is linked to a 5-year window, or so on and so forth, then anything which goes beyond 12 months, it becomes other long-term employee benefit plan. And that is where the element of discounting in a way comes in. Here you saw if it is a short term, I don't need to discount anymore, right? But if it is other than short term, in the long term, then I need to start discounting my obligation and start then unwinding the discount as the period progresses, in a way, so on and so forth. So let's try and do this in a way with the help of an example. So MNO Limited is in the business of manufacturing textiles, right? The company has a profit of INR 250 crore for the period ended 31st of March 2019. How much profit I made? 250 crore. Now, MNO Limited has an ongoing profit sharing plan in place, according to which it distributes 7.5% of its profits to employees if they complete 12 months of service in the organization, right? Now, based on this plan, MNO has an obligation to share the profit. So how much they distribute? 7.5% of profit to employees if they complete 12 months of service. Based on this plan, MNO has an obligation to share the profits with the employee if they meet the specified period of service. The attrition of employee has been high for the year, and MNO Limited estimate that the payout will be around 6.5%. That means a certain section of the employees will eventually leave. So what is the amount of liability to be recognized by MNO Limited? Fairly simple, 250 crores. My liability is 7.5%, but I don't expect to pay 7.5 because there's a service condition attached, and those guys are not likely to fulfill the service condition, right? And hence, I'm going to accrue for 6.5%, right? And I'm going to also link it to the employment, right? From that perspective. So recognize below as liability and a corresponding employee benefit expense for the period ended 31st of March 2019, profit for the year and estimated payout on the plan. So 250 crore into 6.5% equals to 16.25 crore is what I'm going to record as a liability in my balance sheet. Okay, and of course charge it to the P&L or capitalize if it is Ind AS 2 or Ind AS 16 or Ind AS 38, or as I said, any other relevant Ind AS. Okay. So quickly to summarize, what we all talked about, a short-term employee benefit could be short-term paid absences, profit sharing and bonus plan. Short-term paid absences could be accumulating or non-accumulating. Again, could be vesting, it could be non-vesting. And then there are multiple forms like wages, salaries, and so on and so forth. Anything which is get paid within 12 months, right? All of that is what you need to account for. And then deal with them appropriately. All right.